It's my pleasure to welcome you on the probably most fascinating panel today. We will be talking about tokenization, future finance, and probably will be answering questions whether we all will be very rich in 2 years' time when we invest in tokenized assets. So let's hope it will be the case. Before I will start with my guests, question to the public: who owns any cryptocurrency? Who doesn't own Bitcoin? No Bitcoin. Okay. Ether? Polkadot? Okay, so we have quite knowledgeable public. So my name is Katarzyna Lasota-Heller. I am attorney at law, Swiss and Polish attorney advising clients on regulatory issues, especially institutional clients, if they want to start let's say investment funds based on cryptocurrencies or blockchain. We dare to help. But I'm a partner, founder of law firm called Lexcellence, but I am also chair of a regulatory working group of Crypto Valley Association. So basically what I'm dealing in daily business are regulatory issues. And in the blockchain industry, crypto industry, the regulatory issues are the all and nothing in this, because if we didn't get it right, the sanctions might be very, very harsh. And always and ever there are questions on regulatory. But today we'll not necessarily will be talking about regulatories. We will be talking about tokenization of assets. What's the future? Where are we perhaps in 2 years? We have a new president in the US, and it definitely has to be the topic at the panel, because Donald Trump outed himself, if I may say so, as a big friend of crypto industry. Whether it will be the case, we will see. So the plan for the panel is that I will ask my panelists to introduce themselves, then we will go through certain topics, and at the end you will be free to ask us some questions. I will start with Valerie.
Thank you very much. So does anyone who's got the meme Trump? Yeah, the coin? Huh? No, no one. Okay, I was just joking. So my name is Valérie Noël. I'm the head of trading of Banksys. Banksys is a Swiss private bank, family-owned. We are managing 23 billion assets under management, mostly wealth management. But I implement and lead the digital asset solution for our clients, so we can actually allow our client to trade crypto since 2 years. So I started the project 4 years ago. And we also have tokenized a piece of art that we have split by 300 and give to employee for the end of the year present. So we are quite involved on the crypto and blockchain. And I'm very pleased to be here today.
Thank you.
Hello, my name is Kai Borchardi. I'm Managing Director with Boston Consulting Platinian. We are the technology arm of Boston Consulting. I'm a banker by training and leading the technology in banking and insurance in UK and Benelux and globally, our Web3 and digital asset practice. So in that we support layer ones and crypto native companies in building up their strategy.
So you own Bitcoin?
Pardon me?
Do you own Bitcoin?
Of course I do.
Okay, cool. Sorry.
And work with also then the startups, scale-ups, but also traditional companies like banks and market infrastructure providers to help them getting their strategy into practice and even implement then the use cases in it. So regulation, clearly a big topic in that as well.
Yes. Inga.
Thank you. Inga Malins. I am the founder and the CEO of Fluency. We work with financial institutions and central banks on central bank digital currencies, collaborating with the European Central Bank, the Bank of England, and a few other central banks across the globe. I am an appointed member of Digital Euro project at the European Central Bank Market Advisory Group, and I am also an appointed member of the Bank of England CBDC Technology Forum. Thank you.
Hi there, good afternoon everyone. My name is Alexander Feeney. I am founder and managing partner at Chavinet Advisors. We are a Hong Kong headquartered product and advisory company. We have a number of research, analytics, design, and deployment tools that we offer to central banks and also private institutions that are on their digital currency journeys. So in the case of central banks, that's CBDC, and for private companies, generally that's stablecoins. We're also working with a number of commercial banks on tokenized deposit topics as well. Lovely to be here.
Hello, everyone. Good afternoon. My name is Matthias Bauer-Langartner. I'm head of policy at Chainalysis. Chainalysis is a blockchain analytics company, and what that really means is that we combine and analyze raw blockchain data and combine it with different data sets, including open source information, darknet market information, sanction lists. We've got a global intelligence team to do that. We even use information input from our vast net of customers. We've got more than 1,300 customers that feed information to us as well in the private and public sector. And that really helps us to map on-chain transactions to real-world entities. We've mapped more than 80,000 different entities, and it really helps you to understand blockchain activity. Our tools are mainly used for compliance purposes, for investigative purposes, but also much more towards Web3 business intelligence data. I personally, I've been working on crypto policy, tokenization for more than a decade now in the public and private space. In the public space, my last role before Chainalysis was with the European Central Bank, where I was working on regulatory technical standards of the Markets in Crypto Assets Regulation, MiCA. And before that, I was in the UK at the UK's Financial Conduct Authority, part of their founding team of the Regulatory Sandbox, which really was trying to help innovators to understand regulatory requirements and help them to cope with it. We did, tokenize e-money, shares, and so on already back in those days. In the public sector, that's that. In the private sector, I've also worked at the Digital Assets Exchange, so I've sort of like seen both sides of it. And I'm really pleased to be here. Thank you very much.
Hey, thank you very much. Then we will start with you, because it just came to my mind that usually the crypto industry is like, oh, new regulations again, we need to do the AML, whatever. But for chain analysis, is the regulatory and legal stuff rather friend or rather foe? Because without the regulations, your business probably wouldn't have a reason to exist, right? Or wrong?
Well, so that's a good question to start off with, and sort of like go straight into the heart of it. From a Chainalysis perspective, we welcome everything that makes the blockchain ecosystem safer and more trustworthy, and regulation is a massive part of that. I think even when you think about players in that field, and I'm not only talking about TradFi companies, I'm also talking about smaller ventures, fintech startups. They actually enjoy the luxury of knowing where the roads should lead them, expectations of regulators. And I think that's the one thing that MiCA does very well. It sets out expectations of regulators, and it guides firms into how they should think about not only their organizational setup, but also their products. And when I was back at the FCA, for example, at the first instance, it might look like, oh no, there's new rules around it. But all the firms that I worked with that had compliance at their heart and designed around existing rules, in the long run, that's a competitive advantage. So basically, to answer your question very clearly, we are in favor of proportionate, appropriate regulation that actually fosters innovation in that space, helps it to grow in a very safe and sustainable way. And blockchain analytics is a massive part of that. Because it essentially is a complete game changer in terms of what you can do from an AML perspective, from a business intelligence perspective. And we'll talk a lot about tokenization as well. It has got massive advantages.
Yeah. Valerie, I see you want to add something. Yes, go ahead.
I agree. As I said, we can trade and custody crypto, but we can also accept crypto in and crypto out. And without people like you, it wouldn't be possible. FINMA is not well in advance, but in advance compared to MiCA, so they gave us the frame, but you need the frame. If you don't have the frame, you can't. I mean, and we have done this with them, really in a collaboration, and people like you are very, very important in the ecosystem. also to protect. It's also a protection to the end client. Sometimes we forget that, but it's really.
It also protects you yourself, because when you think about blockchain analytics, it's not only on a transactional level, it's also about entities.
Absolutely.
So when you deal with a different entity on chain, you don't need to think about reputational risks only, or source data somewhere and you're not quite sure where it comes from, how reliable the data is. With blockchain analytics, you can actually see transactional behavior.
Exactly.
You see networks that operate, and you have something like live due diligence processes in place. And that's great from a regulatory perspective for regulators, but it's also great for due diligence purposes of firms. So it's not only for end customers, it's for the firms themselves to protect themselves.
I also think that the fact that we finally do have regulations, it allows the industry to basically scale up. Because if you have a big investment funds, if they want to invest in something, then need to know what they're investing into, and there must be some clear rules, because otherwise they will be they themselves not compliant with their policies. But Kai?
Yes, and there was a very important word in your statement, which is clear rules, right? It needs to be good rules in what you said, in terms of innovation and so on, but especially it needs to be clear and not a kind of direction only where everyone has to think about what it actually means, and then hope for that you were right. Because otherwise we saw it in the last years in the US, there were no clear rules, right? And therefore the courts and suing initiatives were just coming later. And then that cost a lot of money, which could have, I think, prevented when there would have been clear rules in the game.
With that, shortly, we have similar system in Switzerland, so-called same rules, same risks approach, which might be good, might be wrong, because sometimes the interpretation comes later and there is a problem. But let's leave it for a moment, the question of regulations. But we discussed regulators, we discussed compliance, we discussed private people. Now I would like to go to Inga and basically to take on your view on how central bank, basically, what is the approach to tokenized assets and tokenized finance?
I believe that central banks are getting warmer when it comes to tokenization, and they're getting pretty much involved. In Switzerland, interestingly enough, you started experimenting on tokenized assets much earlier, just a couple of years ago. ECB, from the European Central Bank perspective, I would say that started just over the last 2 years. Of course, you've got different types of tokenized assets. We're talking about cash, we're talking about securities. In the end of the day, the pilots that most recently have been conducted, also on the wholesale CBD side, are definitely a step forward. I believe there is a strong cooperation needed between financial institutions, central banks, and also small LPRs when it comes to crypto exchanges and so on. About a month ago, we had a meeting at the BCG offices in Frankfurt, where some of the representatives of the biggest crypto firms were present. And they are still very confused how, for instance, wholesale CBDC or retail CBDC will play out. How is this gonna affect them? Is there any system that will be provided to them to process these transactions at the central bank level, or they will need to take care of the cost of the infrastructure implementation themselves? So I still believe there's still a lot of communication required from the central bank's perspective. Nevertheless, slowly but shortly, they're getting there.
Well, the question with central banks is obviously we have two layers, yes? Right, is money. Do we have money, which is tokenized money, which is at the end we may have not not assets, basically, but let's say exchange assets, something that really the purpose is of paying. But another one is, do we have tokenized assets, like basically Switzerland is now running Promisat, this is tokenized debts and bonds to be issued by the state. So I will go now to Alex, and my question will be, how is the tokenization of assets, let's say, creating opportunities for both, for institutional clients, for retail, for how you see the market?
I see tokenization as an opportunity to drive abundance, right? So it's providing accessibility to both retail and institutional investors. On the retail side, we could talk all day about what's happening with real estate, but for those not familiar, you're going to be able to and can already buy small fractions of, urban real estate that were perhaps completely out of your reach. But now you can invest in a market and have a share in a market. So if you were in Australia and the talk in Australia at the moment is everyone's priced out of the Sydney market. So everyone's moving to Brisbane or Adelaide or something like that. Well, if you still feel that there's upside in the Sydney market, there are going to be tokenized apartments and houses in the city where you can buy 1/50th of a house and you don't need to fork over the millions of dollars that you need at the moment for a Sydney property. So there's a lot of, I was just down in Australia over Christmas and there's a lot of talk about that down there at the moment. You mentioned also, debt. So there's going to be all sorts of fractionalized loans, access to trade finance, all sorts of debt-related products, which will be fractionalized that you can buy, pieces of. And this just creates a lot of liquidity that you didn't have before. And if you think about things like private equity, which the average person would just never have access to, there's a couple of interesting companies out there, Moonfair, for example, that are providing access to private equity to more retail investors. I think that is a trend that's going to continue, and you'll be able to buy and trade liquidly, in a very liquid sense, these assets, just on your phone. And at the moment, real estate, private equity, these are very illiquid.
Yes. Question again to all of you. Anybody owns something in metaverse? Building, Eiffel Tower? No? No. What do you think, guys? Just another question, because we had some hype 2-3 years ago around NFTs. Do you see it coming back? I would like to comment on this.
Well, maybe in a slightly different way. Right?
Okay. Yeah.
So when I think you mentioned you also tokenize art, right? Mm-hmm. There you have an element of NFT involved. When you think about KYC elements or KYC tokens, that's in a way also an NFT. Mm-hmm. So it's maybe not anymore the the app and the CryptoPunks and so on, but it might be something more closer to a use case, which is more on a normal level than in the Web3 or Metaverse setup.
Okay.
Yeah, I was just checking my pockets because yesterday I got a card that essentially holds a private key to a wallet that holds an NFT which represents a bottle of wine in a cellar in Switzerland. But unfortunately, I've got a different trouser on today. And as Kai said, I think you need to go through that sort of like more experimentational phase of what is this technology, what can it actually do, and then you narrow it down to. You've got loads of questions around regulatory, legal, and then at some point you nail it down to the use case. And I think this is not an untypical development of technology in crypto and others.
Inga?
I agree with you. I think it all starts with the warming back of central banks and the regulators to DLT. Yes, distributed ledger technology. Still, they are very concerned about security of that. Some of them are, I would say, pro-blockchain. Some of them are not. I know that today, of course, we are focusing on tokenized assets, maybe outside of the CBDC. Nevertheless, they all need to work with each other, yes? So blockchain will be here if we want it or if we don't. And I think once we will warm up and the regulators and the central banks will warm up to the technology itself, then any type of asset that you would like to add to it will be much easier. And then the same with the public. They will understand that actually they're not going to lose their cryptocurrencies, they're not going to lose their tokenized assets and so on. I think we need to start with the regulators here and with the central banks.
Again, it all comes to the regulations, you see. Would you like to add something to it?
Yeah, just, well, NFT, maybe I have two boys, they game a lot, 10 and 12. So I can see the NFT vibes that we used to have coming in the gaming industry because they want to buy skills all the time. They would do, can I have Tetris? I say, for what? I have to buy a skill. So I think if the industry of the NFTs go back to these gaming things, that's a way that they're going to come back the old way. And if not, I completely agree with you. NFT, which is you have a real asset behind. I think that's going to be also something was going to grow in the future.
Inge, you started very interesting topic. I know it probably was not in the questions which we prepared, but I would like to come to this because it's very, very important. We have different digital platforms, different assets, different topics. What about the interoperability? Where are we going there? Because if everybody has a small platform and tokens which only work on that platform, it will not scale up. Any intakes here?
Yeah, one of my favorite topics, I must say.
Go ahead, be my guest.
So typically what we see, there are a couple of elements that any kind of blockchain or tokenization platform need to have. Right? You start with regulation, compliance, security levels, scalability levels, but at the end somehow also cost, and everything together is then a question of if everyone has only their own little island of a tokenization platform and a little bond, maybe a bit bigger, 100 million, or a little asset of an art is on two different ones or on hundreds of different ones, as it is happening right now with POC, with pilots, we never get adoption because liquidity can never flow from one to the other. So in our research, we found out that next to the a bit more technical problem, there is one key element which is currently missing, and this is trust. Trust that if I have a tokenization platform and you have one, how do I know that yours is as secure as mine? So
you go to chain analytics, probably?
No, that's probably not going to happen, especially when you have private chains, right? So you need a minimum level of quality standards in order to trust the other one is as good as mine, and therefore I can connect. So what we did with DTCC, Euroclear, and Clearstream, we built up a framework about tokenized assets and controls and risks. So we classified all the potential risk the moment you put an asset on chain that you can get to, from cybersecurity risk, compliance risk, financial risk, and so on, and put controls against that, publicly available for the industry, to help increase this minimum standard so you can actually trust the moment you're following the standards, I'm good to connect with you, right? That's the idea behind.
Okay.
I think there is also one additional problem is the differences from technology perspective on top of the regulations as well. So you got many projects going on, including retail CBDCs, for instance, when it comes to European Central Bank, which potentially could be based on account-based systems. So then you need to have that seamless interoperability between account-based systems. Why? Because you need to enable your customers to withdraw the money for whatever they buy or whatever they want to pay with. Yes, they need to withdraw the money in digital euro, they need to withdraw money in normal euro, they will need to withdraw money in, I don't know, Polish zloty, because they are not planning any CBDCs. In the end of the day, that could be account-based. And then tokenized assets and wholesale CBDCs will be token-based. How will this seamless technology will work? If it's not going to work, it's going to affect the cost of your transaction and the length of your transaction. And actually, then you're going to lose adoption whatsoever.
But this is the whole confusing, yes, because we keep thinking about tokens and smart contracts. This is how it started. But when we start talking about account-based payments or investments instrument, then we actually in TradFi back. Yes, we back in traditional industry. So
even worse, if I may say. No, when you trade, so I'm a head of trading, so I trade. We're a fragmented market in Europe, less fragmented in US. And then when we start the solution of, plug some counterparty to trade crypto without, choose one exchanges, in crypto you need to pre-fund. Or you need to sell, you need to give your token to someone to be able to sell. And that it's not efficient. So we had to find broker, like the same thing that we find in traditional work. We find broker, or they were plugged to different exchanges and liquidity provider. And we had to a little bit force some of them to come a little bit in a TradFi mode, just to say that, no, I will not accept a Telegram order. So I need to be a fixed protocol with you. And I need, I give you 1 million to trade, but you need to give me leverage. Because if not, it's not, even for the end client, it's not efficient. So we still have work to do on that. And probably CBDC will help. Will also help in TradeFi, as you know, you may know or not, but when you trade in US standard equities, we used to do T+2 trading settlement 2 days, and last year in May we became T+1, and everyone's talking about T0 because of the blockchain and everything, but if you don't have CBDC, T0 will not be possible.
Exactly.
Because you're back in T+7,
Yeah,
right?
now it's
Also
T+1.
Yeah.
And just last things, in 2021, Credit Suisse and Nomura done the first trade T0, an hour and a half, on a private blockchain. So the financial industry they're in since a long time, they try to do, but then we come back to private and public blockchain. So it's not mature 100%, but we're getting there, slowly but surely.
I'm going now to Alexander, because you're based in Hong Kong. Tell us a little bit about the Asian market, because we keep swimming here in the European regulatory problems. How speedy and fast is Asia then in this?
I touched on this a little bit on a panel yesterday. We obviously have these super apps in Asia, which if you haven't tried them out yet, I really suggest that you take a look at them. So you've got the likes of WeChat Pay, you've got Alipay, you've got Grab in Singapore, and others in the region, and these you can move seamlessly between finance, lifestyle, communication, what have you. Elon's, of course, talked about X, the Everything app. I think there's some of these apps in the works in Europe, for sure, but they're not here yet. But the expectation in Asia, certainly in many markets, is you have almost instant payments. Everything is digital. In Hong Kong, and the topic of tokenization. So we've touched on wine. There's a company called D-Vino, I think. So like decentralized or digital vino. Hong Kong is a tax-free wine market. So I have a number of friends that I know. I have a number of friends in town that have large wine collections. They're very passionate about wine, and you can trade. They can just sit in their car in traffic or whatever, and sell a couple of cases of Petrus or what have you, and just move it digitally across the platform while it's in secure custody. I mean, that already exists. HSBC, our local bank, has just launched their gold token, right? So it's fractionalized, tokenized gold that you can buy and trade right on their website. So that's like if you go to hsbc, .co.hk right now, you'll see it right there. They're definitely pushing that. So you're seeing these trends everywhere. Hong Kong is a special market because we have the e-Hong Kong dollar, which is still in pilot phase, but I can certainly use it every day if I want to in certain venues. There's now increased, call it a version of interoperability between the e-Hong Kong dollar and the ECNY. ECNY, of course, is still technically in a pilot phase, but if you look at the number of transactions, you could argue that maybe it isn't in a pilot phase. But I think Hong Kong is an interesting market to watch because there's a lot happening in the crypto space. We've got a new stablecoin bill, which has just come in. We've got the e-Hong Kong dollar, which is absolutely moving forward. I mean, when I read a lot of Western press, it seems quite almost negative on CBDC, but whether it's wholesale or retail, doesn't matter. But I can tell you from the markets that I'm talking to that they are progressing. It's not happening at the speed of crypto, that's for sure. It's more glacial, to use an alpine term, as we sit here in Davos. But they are getting there. There's huge reputational risk that they run, and so I think they're taking their time and working bit by bit, so to speak, on their solutions.
Maybe one addition
Go ahead.
to Asia. The market there, also the culture there, is very, very different when it comes to retail. Everything is much more gamification-like. So we built in Malaysia a platform in order to tokenize even stocks. Yeah. Because the average investment of a retail customer there is maybe $5, and we enable them to even buy stocks which are $100 with just one of them. So it would be otherwise never possible. the interesting part why that was successful is we put gamification elements in the platform. The moment you trade more, you get a higher loyalty part where you can get additional financial sides or better interest rates or something like this. And with that one, the adoption rate of that was incredible. And this is kind of loyalty elements or gamification, which we typically do not see so much here. But that's without that, hardly anything works, especially in Southeast Asia.
So do you think we all should become gamers now in Europe?
Well, it's gamification. It's not gaming. They're different.
Okay. A question to Inga, and you all are free to comment after this, is Donald Trump said he's banning CBDCs, basically. Do you think he knows what he is talking about?
I don't think the subject of CBDCs have been explained to him. And on the other hand, of course, we got politics in the US. Let's just be honest, he's been very supportive of the technology groups, and you could even see during the inauguration.
But they need CBDCs in order to get the tokenized assets, right?
From my personal perspective, I believe they will roll this out some ways. Maybe they will call it, I don't know, $2.0, e-dollar, however it's going to be called.
Elon dollar.
But we cannot have a situation, and I'm almost certain we will have, at least in the beginning, that we will have very pro-crypto United States and very pro-CBDC European Union. And then again, that comes back to technology. How on earth we will be able to process the transaction seamlessly? We need to think about the end customer. In the end of the day, whether it comes to cryptocurrencies or CBDCs, all of these digital assets were introduced to ensure the speed of transactions, to ensure that the price of transaction is much, much lower for the end customer. And I think this is what we need to think about. All the American firms that have customers in the European Union will need to have interoperability, again, between account-based systems and token-based systems to be able to enable their clients to withdraw the money for all the cryptocurrencies they're going to invest in, whether it's meme coin or Bitcoin or any other currencies. So I truly believe it's going to be very interesting, but it's very political. And just one more note, it's quite interesting as well to see what's happening at the central bank level and that fragmentation of a dominance of US dollar on certain markets, for instance, in Asia, with the Bank for International Settlements withdrawal from the Enbridge project so that they can focus on the projects in the US. So this is very interesting to see that CBDCs are very much linked to the existing currencies and the dominance of dollar on certain markets, including in Asia, Africa, or elsewhere. That was one of the main reasons why the CBDCs project got started in the European Union, to ensure that there is less of dominance of the US companies, including Apple, Google, and others, Visa and MasterCard, on the European market. So this is going to be interesting to see how this is going to play out as well.
Definitely. Alexander, yeah?
I personally feel that Trump has been ill-advised on CBDC. I know he's been obviously close to the Florida governor, Ron DeSantis, who's been vehemently outspoken against CBDC. I think
But why? Why
so
this
the
is so
issue is
happening?
the issue is the reputation around CBDC being a surveillance technology. And the reality is that the technology is out there to ensure, and this is beyond like zero knowledge proof and whatnot, but don't have to go into the technicalities. There is the technology to enable transactions to be completely anonymous and private. That is possible. You can have the same level of privacy and anonymity. But this comes down to the design choices and the policies of the central banks. So I think he's going to come around to it. In the meantime, you're going to see a continued abundance of and proliferation of dollar-denominated stablecoins, right? So obviously, we're seeing consolidation happen. We've got, Circle here on the promenade. It's been interesting to watch that story, who they've been acquiring, how they've been growing. We can leave USDT out of it, but these only help demand for dollars, right? Which suits his agenda. But in the fullness of time, they're going to have a CBDC as well.
I guess so. I see. Can you?
Yeah, I would agree. However, sometimes it's good also to go beyond just the developed countries, right? And look into the more developing countries, so third world and beyond. And even a stablecoin, like when you're lucky, also a good, well-audited stablecoin, is typically even more secure than the local financial system and infrastructure. So on that one, a stablecoin is a step forward, massive step forward for many in many economies on the planet already. And we see a lot of payment flows, really corridors, remittance corridors, especially between North America and South America and within Africa, which are moving directly to stablecoins and to buy real world products.
Yes, and this is, but they're good for customers and consumers at the end, but they're problematic for central banks at the end because they're losing control over the money flow. And whoever believes that it will be just free market, it's probably wrong thinking, because no central bank will ever let go control over financial market and on payment system, right? So we here a little bit in the clash somewhere.
True.
I agree with you. I mean, there's a lot of people who are unbanked. The only thing they got is their phone. And the only thing to have freedom, it's via the phone, via stablecoin, crypto, whatever. And we don't really think about it too much, because if we want to go to ATM and take $100, we can do it. But a lot of the world are not like that.
I also see stable coins, just like you said, in the developed world, they are probably less relevant than in other countries because of the existing rails. And when you look at the MiCA regulation and e-money tokens, for example, I mean, they are literally just normal fiat money using blockchain technology. It's just a technological change. So I think the impact will slightly be different. But where I see stablecoins playing a really important role is what you can build on top of that. And we're talking about tokenization, and one of the main things, I think that there's loads of hurdles for tokenization, some of which are regulatory, around settlement, finality, and so on. We don't need to go into these details either. But I also see that value transfer is a massive part. When you speak about wholesale, it will probably be something like a CBDC, blockchain enabled or blockchain connected system. It probably doesn't need to be decentralized technology as such. So I've been working at the ECB, and every time you say CBDC, people go like, decentralized currency. We are a central bank. Like, how does that actually work? And do we need it? Because like decentralization, obviously it's a massive spectrum. It's not binary. There is loads of ways you can decentralize business models from a technical perspective, a governance perspective. And the question is, what sort of system or blockchain do you actually want for your use case? And it might look different in various countries, but they need to be interoperable. So stablecoins as a way of actually building up use cases, and from there building up markets and changing infrastructure. One of the main things that I've seen, and I've been working on projects tokenizing fiat and bonds. The regulatory questions, and there's loads of them, you can cope with them. But what I found was even more difficult for firms was building a business case on top of that. So having enough liquidity, to Valerie's point earlier, connecting exchanges or marketplaces, to your point, Kai, earlier, you need to, it's a chicken and egg problem to some extent.
Yes.
So I'll tell you a funny story, which I think it's funny, maybe it's too nerdy, but we tokenized shares. Mm-hmm. And then it was at the point where investors were about to be delivered those tokens into their wallets. Mm-hmm. And they literally said, please don't send me the token, you keep it. It's just additional operational risk for me to hold that token, because there is nothing I can really do with it at the moment, because there is no trading venue that actually facilitates liquidity, because there is no CSD that can hold tokens. So in a way, you need the infrastructure in order to build liquidity, and you need sufficient liquidity in order to make infrastructure investment a feasible thing.
So after this, what I heard today, guys, will you agree that the technology itself in the area of crypto industry, crypto finance, blockchain, on the one hand is the mother of the industry, but on the other hand is really like it's a factor which does not allow to scale it, because if we don't have infrastructure to trade decentralized without central party behind it, and if you say, oh, I don't want it, you better keep it, it's safer with you, basically, then are we going somewhere, actually?
I think you're absolutely right. And it should start, again, with the central banks at the wholesale level. And I would definitely differentiate the wholesale level from the retail level. Mm-hmm. From my personal perspective, you will end up with the fragmentation from the private market point of view. So different organizations will have their own applications or super apps, as you've mentioned. They will be trying to duplicate what is happening in Asia with different type of assets they would like to offer to their clients. But there's also the wholesale level, and then all the cross-border transactions between different central banks that need to happen. And for that, we need to have unified regulations and we need to have unified systems.
Hopefully.
Yeah, no, I agree. I think it's just technology is faster than regulation and everything. So technology is here, but then, you still have to go to the solicitor. You still need to go, at least in Europe, it's here, and we need to run a little bit after that. And yes, it's important to have liquidity, to have the frame, but it's here, it's there, we know it's working, but we need also company or fintech who's going to do the bridge on a lot of project which is already on.
Yeah, I guess everything starts and falls what you said, right? The use case with a business case. The moment you have that, and it's going beyond a little island blockchain, really with adoption, really with liquidity and network effects, then we will be able to scale. But it starts really with the business case behind that. Because then there is a logic for users to go for it. And then you have a flow. You have a flywheel that enables scalable growth.
And we can see how positive regulation, can actually impact the stablecoin market, for example. Looking at on-chain transactional activity, in the last year, the stablecoin market grew 2.5 times more than the US stablecoin market in terms of transactional activity. And even with the advent of MiCA in summer last year, we've seen that transactional volumes of roughly 200 million in euro-denominated stablecoins have shot up at the end of the year to more than 5 billion transactional volume. So MiCA does have a direct impact on the market, and I think it just creates more and more momentum in the stablecoin market, which creates, again, more momentum for other use cases. And in the financial market, and tokenization of shares, that's so much more complex with different players who move much slower, and they need to coordinate with each other. Like having a trading venue that is now able to accept trading activity with tokens is great, but completely useless if you don't have the custody solution or a CSD at the back. But then, the trade settlement and the custody is the same thing, so they sort of like come together, two traditional functions in one. So it all gets a little bit messy, and that's why I think it will just be step by step by step by step, very slowly and carefully, and will take quite a long time for these markets to materialize. But to be honest, I think it's just a question of when rather than if.
Yeah, I completely agree. It does sometimes in our industry feel a little bit slow, but just looking to the audience here, how long ago was it that when you asked or talked about Bitcoin or any of the top cryptocurrencies, you'd be completely dismissed. These things are, it's a Ponzi scheme, it's the tulips all over again, it's all this. This wasn't that long ago. We're only going back a couple of years, and now all of a sudden, yes, you've got the Trump meme coin, but you've now got, I think it was just yesterday we saw Intesa Sao Paulo as a bank buy $1 million worth of Bitcoin. Obviously, that's for a POC or a pilot of some kind that they're trialing. But we're starting to see, we've got countries like Bhutan, you've got El Salvador. I think we're going to see strategic Bitcoin reserves come online, if not this year, then very, very soon. As this happens, the momentum builds. I think the future of finance is on chain. I think that is a fact. Yes, at the moment there are certain, transactions per minute limitations with some chain. There are some constraints. There are some limitations, but these are being worked on and improved every day. And I think the future of tokenization is bright.
Cool. So we have a few minutes now if there are questions from the public. Somebody?
Thank you. So given the reserve assets requirements under MiCA, what are the trends in terms of the early adoption? Probably a question to BCG mostly. Thanks.
Well, you have the liquidity or the reserve requirements, especially for cryptos, right? What we were primarily talking here was much more the tokenization of normal financial assets, which are a normal security, just in a different way. So therefore, the requirements there will be different, given also that, well, there is still the original bond in your central security depository. So there we really have to differentiate the MiCA as well, and MiCA as such is doing it, right? On crypto, well, I think Valerie can even answer that question better. We had a discussion at the beginning or before the meeting here that actually they're not holding the cryptos on their own balance sheet. So exactly because of that reason, right?
So the question was referring to stablecoins.
Okay. There you have for stablecoins, it's a little bit like in my opinion, MiCA is using it, or the central bank and regulators are using it in order to keep control about their own payment and volume of M1 and up to M3 money, and that's why they want to first have an own solution and before necessarily creating a very diverse industry for stablecoins in Europe. Right, that's at least what we hear a bit in the market.
Can you? I'm not quite sure. I totally understand your question around crypto because around stablecoins. So basically, you've got two types of stablecoins, right? You've got the e-money tokens and the asset reference tokens. With e-money tokens, you essentially need to have one single fiat currency backing it, and at least 30% of that must be in a bank account. These are roughly the rules, right? And with asset reference token, same thing. You can just use different types of assets. And you need to make sure that you make your national regulator comfortable that the types of assets that you used and the methods that you have in order to keep that value stable are adequate. That's roughly what MiCA says.
Yeah, that's why I wanted to understand the trends. Who are the early adopters, given the facts that you just said?
Okay, trends, yeah. So, and then when I look at the market now, there is a clear preference for e-money tokens. Yeah. So pretty much everyone is trying to build an e-money token, which is electronic money on DLT, because it's the one thing they know best to do. It's pretty much e-money regulation they are used to. So it's probably the best first step into actively going into blockchain technology, apart from custody solutions for institutional, which is also one thing that banks really like to do. On the asset reference side, I see less activity at the moment, although there is one, I think, gold-backed.
And maybe one additional, we have exactly the same question as before, isolated pilots and so on. Every bank is partially doing it themselves. Luckily, in Europe, there are starting to be some consortia around it of different banks together, which obviously then creates a different possibility of use case, right? And that's hopefully where the trend is going towards.
Any other question from the public? Somebody? If not, then I have a question. Do you think there is any way back to the utility tokens hype?
Is it gone?
No, I mean, Switzerland, they classified, there is utility token, asset token, and payment token. And we just ask us to be able to trade actually utility token, because for the moment we only have a payment token, but we ask for utility and securities token because we have clients who would like to buy a token of real estate, as an example.
Okay. Somebody else on utility?
I guess that's the answer. In the end of the day, the end customer matters the most.
Okay. Before we will finish, I want to tell you also quite interesting and funny story. 3 years ago, or maybe 4 years ago, there was a discussion within Swiss and Central Europe Chambers of Commerce, and somebody on the public asked Chief Investment Officer of Credit Suisse why Credit Suisse is not investing in crypto, especially in Bitcoin. And the gentleman said, because it actually does not solve any problem. It was the question. Well, that's true, but Bitcoin today is around 100,000 and there is no Credit Suisse anymore. So, so I think the future of crypto finance and assets is actually bright. It really depends on the stakeholders on the market, how we adopt it, how we develop it, basically. But still, I think we really need interoperability, because otherwise it will be very difficult to scale up.
If I may just a quick note on this one. I think, you know, the idea obviously always was that Bitcoin is going to be something like a new payment system, and everyone was thinking through that lens. And clearly Bitcoin is not a great way of facilitating payments, but it's a great way of holding value for multiple reasons.
Like gold. You don't pay with.
That's the digital gold, huh? The native.
You do have the Lightning Network, which
on layers 2 maybe.
And you can see that on transactional levels when you look at blockchain transactions, right? So we have got stable coins. They are roughly 200 billion at the moment. Of the $3.5 trillion crypto ecosystem, 2 trillion roughly is Bitcoin. So Bitcoin is really the massive part of the crypto ecosystem. But when you look at the overall transactional activity, 50 to 60% of all the value that moves is in stablecoin and only 10% in Bitcoin. So it really is a store of value, and as such, it's extremely good. But that's to the earlier point. Like, we do have loads of technology, we just need to figure out how to best use it.
Somebody to add something on that, because.
Just something I'm watching at the moment is the concept of the flat coin, right? So a flat coin, the idea is that it's a stable coin that essentially compensates for inflation. So you could hold USDC, but I don't know if anyone's been to the States recently. I mean, $100 used to be a lot of money. $100 is not a lot of money anymore. But if you're holding USDC, it's like holding a Benjamin in your hand, right? In your wallet, in your digital wallet. And I think the flat coin as a concept is very interesting. And I think you're going to see a number of those come out. There's various concepts, right? They're backed by baskets of currencies paired with gold. Some of them are looking at the SDRs, so special drawing rights, various algorithms and whatnot. And I think that's a trend that's going to continue. And some of them are issuing governance tokens as well. All very interesting. I think it's fascinating. I think there's going to be a huge supermarket of financial services that are going to be available. There already are, but I think they're going to become more mainstream.
Yeah, but it will be important that they are available to us, and we know how to approach it and how to acquire them, because the idea behind Satoshi was that everybody will have access, yes, but I think what he didn't really think through is not everybody of us is a programmer and IT specialist, so we cannot, go and mine them themselves. So at the end, we need to have kind of central party, trusted party, where we can buy it. And the whole idea of decentralized finance actually finished there.
Yeah, you still have the centralized exchanges, digital exchanges, right? My point a bit to the thousands of tokens which are existing, it's still relevant to know what they're actually doing and how they're built up. Otherwise, we have another FTX situation. And Tether situation. So not everything is always great in bad times as well. But
it's going to be all this remind me a little bit 2000. I'm old enough to have been to 2000 bubble on a stock market and 95% crash. I mean, we use 5%, then been bought, and I mean the adoption will come when for the moment it's like you want to know how Siri works, with your phone, but you don't know you use it. And actually the adoption and all the ecosystem would be when people is going to use new stuff, but they're not going to realize or think about, how does it work behind? No, you're going to use it because the business case will be there and we're going to use it. And I think that's when the adoption will come out.
because I think that with this new technology, blockchain analytics, we can actually build much better and safer systems than the ones we currently have, and that should be the aim. And that's why I joined Chainalysis, basically.
Thank you very much. We needed to have a hard stop, basically.
Sorry for that.
Yeah, no problem at all. But I think there will be a lot of other opportunities to continue the discussion. So thank you very much.
Thank you.
Yeah. And I hope you guys was informative and entertaining for you, that you got some knowledge as well from our discussion. And yeah, hopefully see each other again next year. Thank you very much, Polish Business Hub, for hosting this.